Hello, welcome to FreeFX, your free education resource for Forex. Today we're going to talk about the Canadian yen. This currency pair has been mounting a recovery of late, so we can see the monthly chart here in front of us. I'm going to talk to you a little bit about what our trading options are here. First of all, an overlook of the entire chart from the beginning of data back here in 2000. So we've got about 14 years worth of data in front of us. This is a monthly chart with candlesticks. I'm using Trading Station FXCM. This is not a plug for FXCM, it's just what I use. So just first of all, a disclaimer is verbal. Just going to tell you that anything you see here is just free advice. Take it or leave it, and do not sort of take it as a tip for trading with your own money. Today we're going to talk about this in a technical sense and possibly touch on fundamentals, but essentially it's an analysis of what the past price action has shown us and how this is going to help us trading this pair potentially long term. So I'd like to start by sort of having a look at this as a visual graph of the pair history, and we see here clearly that we have a couple of features. First of all, if I just wanted to break this down into two, I'd probably want to do something like this, which I'd take this rectangle and essentially take two halves. The first one is about here, and then the second one here. Okay. Now, so what we see here is that essentially is that we have two halves for this, and the way this helps us, it may seem quite a long shot, but it's to try to identify some sort of symmetry or cycle that could help us. I mean, one thing we need to be clear about is when doing a video like this, we are working on price action that is in the past. How is that going to help us? Well, it cannot predict the future. Past performance is no guarantee of future results, but we can certainly have a look at see if there are significant levels based on what we have had before. So what we're going to do next is actually we are going to, just to simplify things, I'm going to take away this and simply remove it, because we know now visually that we're working on this November 2007. Okay, so end of 2007, 2008, this sort of boundary mark, if you like, of this ascent. Then there's a sort of breakdown here, and then we are working on a second ascent, if you like. So essentially, could this be a symmetrical journey going up? Well, we don't know yet, because obviously nobody can see the future. Now let's start with the levels. So what I'm going to do first of all is to use a Fibonacci, which is a very, very useful tool, and I recommend using it for major levels. So I'm going to just draw the main levels there, okay, and keep it as the default color. So there we have it. It's the three levels that we have: the 61 here, okay, and 50 here, and 30. Now I'm just going to make them slightly thicker so we can see them a bit better, and the levels, make them darker, about this thickness. Okay, so we've got them now. Excellent. Okay. Now you may be able to see the levels. So the current price we have is 93.76 here in blue, 93.76. That's where we're at now. And the closest levels to the price at the moment on the Fibonacci levels, so the two levels either side of the current price are 96.95 and 90.20. So this Fibonacci works on this downtrend from the top of this candle high to the bottom of this candle low, so 2007 high, 2009 low, and then drawing that gives you these three basic levels. Obviously you can have more levels, but we're not interested in the other levels at the moment, because really we are straddling the current price with these two levels, so that's really what we need. So that's where we're at now, and so these two levels are major levels. Now just looking back a little bit here, what we have is price going above this level, okay? So if we just made it smaller, but not actually getting up to here, and here sort of drawing a bit closer, and there's some kind of resistance here. So you can see that the close here is below this 50 level, and here as well. So for 2 entire months, and actually for 3 months, because this is quite close. 3 months, this one also, the high is actually just above, and then here we're just above. Again, resistance. Now we break above, and then back below. So now we've been sort of above this, which is the 38 level. Okay, so we are in this area here. Of course, we could break it down into smaller time frames and create a second Fibonacci layer, which we can do, of course, to help us put in the levels for our trades. What I'm interested in as well is, having had this Fibonacci drawn, I'm going to see if there are any visually obvious levels that could sort of signify support and resistance. So we can call them support and resistance, or, as you like, supply and demand. Supply being a resistance level, and demand being a support level. Some people prefer to talk about those rather than support and resistance. Okay. Also, you might talk about support and resistance as lines or areas, and again, or instead of resistance, you might call it supply instead of. So, I mean, it is entirely up to you. I'm going to call them support and resistance because that's what I'm used to, and it works for me. And so we're going to talk about precise levels, or approximate levels if you like, but as one level as opposed to a zone. But it is important to think of these as approximate levels, as there are also, you know, breaks above and below which do not sort of do not really coincide with exact levels, but you can sort of play around with the levels I'm going to give you and sort of take them with a pinch of salt. But essentially, that's what I'm going to do. I'm talking about precise levels, and then, you know, with a plus minus approximation, so it doesn't have to be exact. So let's get to the nitty-gritty. So I'm going to use horizontal lines for this, and I'm going to snap to nearest, so it's not sort of hand drawn. It just clicks onto the nearest high or so on. So I'm going to start with this, for example. Now you see here, if I'm looking at this and I want to see into the past with an eye to seeing what might happen next, first of all, I might say, okay, well, this is obviously lower than this, so let's see what might happen if I took this level here and went back visually. Is there anything else here around the same level? Well, there is. It's this sort of level is close enough. What kind of level is it? 98? It's sort of 98. Well, let's go to this point. Okay, it's giving me 99.16. So if I made it a round number, which I think is fantastically obvious as a powerful psychological area, it's not rocket science. We all see the same numbers as traders, so it makes sense to use these levels, which are round numbers, which are very significant generally. But this is not a new theory that I've designed, but it's something certainly I started working on recently, and I'm certainly really interested in using it in my own analysis. So something I've recently really discovered is that using these round numbers actually has not just a sort of mathematical simplicity to it, but it really does reflect collective psychology. Not always, you know, not by itself being a perfect tool, but it does actually. So I'm going to click on 99 round number. Now this actually looks pretty neat there. So this is looking back to January 2014 and December 2013. Now this level, as you can see at this point, is actually 99 here, and this is 99.50, and just above is 100. So the high of this huge candle in October 2008, which is the height of sort of the market crash, sort of autumn of 2008. Well, this is, you know, this level is quite close to that close. And then here as well, we are quite close. Although remember, this is a monthly chart, so every little movement of the mouse pointer is quite a few pips, sometimes hundreds of pips. And that's, you see, that's 98.50, and that's 99. You may not be able to see it, but it's a very small movement of the mouse pointer. So we got this going through, but not quite. So kind of resistance here. here, here. So we break above this level and then we stay up all the way. Okay, so the 50 level here is 96.95. So let's call it 97, and this here is 99. Okay, so we're not far from the middle of this sort of range, from super high to super low, to call it in a sort of mundane, sort of kind of common tongue way. Very high here at sort of 125 point something, and this is 168. So it's a massive range here. Now, obviously, we have approximations to levels, as I said. So this 99 is also 100 here. So 99, 100, anyway, is a significant level. So let's keep it there. I'm going to make it slightly more obvious. And to just keep things simple, I'm going to remove the Fibonacci for a second and change this to black. Okay, so I'll make this first one black and slightly thicker. So now, so this is a significant level. Now, down here, at the opposite side of this candle, we have some support. So I'm going to draw a line here. Again, using the horizontal and snap to nearest. I'll make this... okay, so this is going to the the low of this candle, and I'm going to make this a different color. Let's say dark blue, and I'll make it a dashed sort of line, quite thick as well. There you go. So now, so I've got these two now, and looking back, we see this line doesn't quite match exactly with anything, roughly here, but nothing particularly matches in that respect. However, if I move this back a little bit, just to check, okay, nothing much. So well, it seems that this is more of a local support level. There's a bit of resistance here, so it sort of works. Again, as I said, zones might be working better in this respect. Rather than creating two separate lines, you could just create a thicker area, an area rather than a single line. But we have this level here. Now, you see this top here and this top here have approximately the same level, and this one here as well. So we create a third line and make that third line in a different color. Aside from here, and we'll make it, how about orange? Yeah, orange is good. Keep it orange, fine. Right, okay, so now we have 3. So it's 1 there, 2 there, 3, and actually 4. So we're kind of bumping against this one at the moment. Trying to break through last month and this month, April and May is sort of trying to break through, but it stops just beneath it. So we have all these levels, and now we want to know, for example, where we're at here. Okay, we've got enough levels here, and that's a 93 there to 91. That's about 270 pips, more or less. Okay, so that's a big range there, and we might want to say, well, there might be another level that we could use. Yeah, there might be. In fact, if we went lower, we want to see what happened here. Okay, there are two candles, as you can see, sort of neck and neck. So I'm going to create a level there and make it different color again. Make it pink, and this one will make it dotted like that. So now, so we got this level here. Okay, 87.21. So let's call it 87. In fact, what I'm going to do is to make it a little bit easier, I'll just round it up to 87. Okay. This one we round up to 91. This one we round up to 93.75. That's maybe 94. How about that? We'll make it 94. Yep. Ah, excellent. Yeah, that looks good actually. 94 is better. So here, resistance, resistance twice, resistance all the way. Good. 94 is probably better. 99, or perhaps 100. I wonder if 100 might be better. 99. So you see, this kind of work is not exact science. It's really trial and error. Maybe 99.50 will give us a good compromise between the two. 99.50. Right, so we've got this almost touching there. That's right on the money, and that one there is good as well. This one is right on the money there. So we'll keep it as 99.50, sort of midway between 99 and 100, obviously. So now what we have to do is we have these 4 levels, and we're sort of just below this one. So we can either break higher, and we've got the range up to here, or break lower, and we've got the range up to here. We have one more level at this point, so I'm going to trace one final line, because that's probably enough, and we'll make it there. Okay, so this gives me 96.88, and if I turn it to 97 as a round number, that might actually give me a good round number level. Yeah, that's good. Yeah, that's fine. So we'll take that off, but change that to a different color again, just to make it easier. Sort of dark green. Yeah, I think that's probably good. Okay. Now, what we're going to do at this point, we have this sort of band of levels. Looking back, we see that they match present and past across these months and years, and here as well, and here as well. Now, we're not going to go all right down to the bottom here, because it's not really where we want to be. However, for this sort of level, we need to talk about the floor of sort of historical significance, and that is exactly here. So let me just draw it for you, and it's right at the bottom of this candle in January 2009, at the bottom of the financial crash bear move. So we're going to go for a very thick line, just to signify that it's a very significant level at the bottom. Okay, so imagine like a thick concrete wall here. So we call this a major resistance. It's 68.15. Now, because it's easier to do round numbers, I'm going to call it 68. Okay, right, so we've got 68, and imagine this being somewhere that we should really consider the lowest of the low. So nothing lower than that is technically being tried. Now, why is this significant? Well, look at this and see, this is a departure point for going back up. Just like here, if we had anything behind this, sort of historical data going back, which we can access actually through different websites, we could certainly do something there. So basically, I'm just going to say that this ascent here is probably going to be a sort of similar in shape and scope to the other one. However, let's not talk about that. Let's talk about this move here. So let's talk about a trend going sort of from here to here. So snap to nearest. I'm going to go into this point here. So I could have different options here. One is this, okay, and close there. Okay, so this line going forward will give me some kind of support. Okay, so if I extend this, it would go to here, but this may not be particularly useful at this point, so I'm going to just delete that. Okay, remove, and actually make it into something else. So add line again. We want to have snap to nearest. Let's go from here instead. Okay, so let's go from here to here, and that's not very neat at all. It cuts across all sorts of candles. So again, would this be useful into the future? Maybe. This angle? Not really. Okay, so we're going to cancel that. So what we need to do at this point, it may be to go into a smaller time frame, and we're going to do that just now. So let's go into a week, for example, and we've got this. Okay, is this possibly going to help us? Maybe, maybe not. Let's go to a daily then. Daily. Okay, how is this going to help us? Well, do we have some kind of trend line? Possible. There's a floor there, support. Okay, from this support here and resistance at this point, so we can see that the significant resistance at this point is 94. We've got 94 here in orange. So 94 is, we try to knock this through. This is a daily chart. We try to knock through this once. Okay, yes. Twice. Yes, a number of days here. Just straight through, and then bang, sellers come right in. 1, 2. This is an inverted hammer or shooting star, if you like, and bam, down we go. And then we go for one more. Okay, there's another one here, okay, and yeah, and then here as well. All of this, okay. So essentially 1, 2, 3, 4, 4 times from the 6th of March, okay. So we're looking in 3 months worth of testing of this level, 94, okay. Now, we're getting closer again. What's happening at the moment is that we're testing this level, and is there a trend line here? Well, this is really, it's sort of 6 to half a dozen. I mean, if you want to create a trend line from here, it might sort of help you a little bit, but really this level here, kind of, if you created a trend line, you get a wedge. So, you know, if you made a line here, let's go to the, yeah, okay, so if we created a candle, a trend line here, and if you continue this into the future, extend line end, apply, okay, so this is what you get, okay. So then we've got this range, so from the low here, 93.62 to here, it will be 93.07, okay, so we've got about 60 between this and the low here for this, okay. Essentially, it's not a big range. So essentially, it's a wedge. Okay, this is the top, and this is the bottom, squeezing this pairing. So there's a breakout potential to the upside or to the downside. I'm going to just delete this for a second, remove, and we're going to go remove these as well. And whilst I do this, you might think, what is going to happen next? Well, I'm going to go to something slightly different. Okay, so we've got these levels, and we're knocking on this sort of 94, and if I went to an 8 hour, the next level down, so we've gone from monthly, weekly, daily, 8 hourly, this is what we see, okay? So, is there a high low? Well, it is here. See these boxes, okay, all these boxes for the grid. Okay, bottom of this box, middle of the box, okay, middle of the box, then middle of, low of the next box up, middle of the next box up, and we're going to here. So we are moving higher, there's no doubt about it, but we're still compressing against this 94 level. Call it supply level, call it resistance, but it's not budging, okay? So essentially this is a strong level, and there's nothing much we can do really. It's going to stay there. So, you know, from here to here to here to here, it's sticking. So essentially what we need to do is to try to decide how we're going to progress. Is it going to go up? Is it going to come down? Well, obviously they said that the path of least resistance is the one that traders usually need to take because it's the easiest one. So if you played a move to the downside, you'd have from 94 to 91, that's 300 pips, okay? So obviously this move is considerable, 300 pips. We're looking at the Canadian yen. So obviously if you bought into the pair, you'd have some carry because the Canadian dollar is at a central rate of 1%, and the yen is at 0. So you're looking at that sort of differential. And if we actually sort of wanted to know how to proceed in this case, well, you know, you have to decide, well, what do I want to hear? Do I want to sell or do I want to buy? Essentially, you know, if you have this situation, well, I would probably go for the path of least resistance. So the Canadian dollar has a 1% rate. The Japanese has, I said 0%, it's actually 0.10. So it's, well, but it's very low anyway, so it's lower than the Canadian dollar. So you want to buy into this pair as carry value goes. It's the better option in the long run. So if you want 300 pips, you're playing rollover swap overnight, so it's going to take your earnings into, you know, it's going to diminish your earnings essentially. But I mean the size of the move, if it's sort of a straight move, there are no resistance levels, which there are, okay, there are. So then you have to think, well, okay, if this went all the way down 300 pips, you know, obviously it's a good thing. If I wanted to buy into this, obviously I'd have carry, but how far would I go? Well, the next level would be up here at 97. So from 94 to 97, again, it's 300 pips. So this is a kind of breaking point. You've got 300 pips either way, and we're right beneath it. So what is going to happen next? Well, I'm going to just go down to the 1 hour level, sorry, 4 hour first, and see what's happening, okay? This is the 4 hour, and we've got this kind of rising. So we are going up, and we're trying to break through. Is there enough conviction? Well, let's go back to the daily. I'm going to add an indicator. What sort of indicator? Well, we're going to add this indicator, and the indicator is the ATR, okay? And we use the standard levels. Okay, so let's have a look at the daily chart for the ATR. So look at the look at this level here, for example. We've got 184 pips per day. We're down to about 46, okay, 0.462, that's 46 pips, okay. This is very, very narrow, okay. So it's very, very narrow indeed. So we obviously gone lower and lower. So this is waiting, is dying, is screaming for some kind of breakout, okay. So this is where we want to watch and wait. Now we've got coming up this week, as you may know, if you went to the Daily FX calendar, okay, that's on dailyfx.com. Again, I'm not sort of plugging in anything, but just saying that you can find information there. FX Street, and you know, they all have economic baby pips. My FX book, they all have economic calendars. They're all reliable, and they sort of give you the different events. So I'm going to look at the Thursday and Friday. Okay, Thursday we've got a lot of event risk, and this may move the markets. Also, this pair may be obviously affected. Now, Friday we've got the Canadian unemployment rate and employment change, etc. So this could be a significant mover for this pair. Okay, on essentially, let me just go back a little bit. So here we go. So let me see if we look back through the week. Okay, so today we had the Bank of Canada rate decision, and the Bank of Canada rate decision today at 3 o'clock. So 1 hour and 45 minutes basically was to hold the rate at 1%. So let's go to an hourly chart now. Find 3 o'clock. Now the 3 o'clock here is there. Okay. Now see what happens here. We've got a slight sort of uptick in the ATR because of this event risk. Okay. So a big candle here from 93, let's call it 93.93. Yep, to 93.67. So about 30 pips, let's say. Okay. And then, you know, what happens? Well, let's squeeze this through on an hourly level. So we're going down, up, staying up. Okay, really it hasn't changed anything because it was expected, it was forecast at 1%, and it stayed at 1%, and the previous level was 1%. So there was no surprise there. Okay, so in this case, nothing has happened. Now I'm going to change this and remove that and add tick volume. So I'm going to add the volume. So let's see what we can find. Right, obviously at 3 o'clock there was a huge amount of volume here. Massive candle, but the body is quite small and the wicks are quite big. So what happened here? Let's see. Well, we're into sell territory. Big sell. The buyers came in. The buyers came in, lost ground on this candle. So very squeezed. The volume has dropped. Okay. What's happening? Is the volume dropping again? No, it's increasing. But look at the candle. Very small body, huge wicks. So we wanted to sell more here. Okay, and sell, but the buyers came in. So a battle between the two. Big amounts of volume, big indecision. Volume drops. Path of least resistance. The buyers are taking hold. Okay. We essentially have, you know, if you look at these big wicks, they suggest that the sellers are pressing hard down, but the buyers are pushing up here as well. So at the moment, I wouldn't necessarily invest in this. What I would do is I would hide this for a second, look at populating this with another Canadian pair. So I'm just going to make that into that. And let's see what happens if I took another chart and overlaid Canadian, let's say Aussie CAD. Okay, let's try something like the Aussie CAD. Obviously this will be inversely proportional, or rather inversely in direction. So if the Canadian rose, the Aussie would fall. So these should be like a mirror version of each other. And if we looked at the daily, okay, might be easier to see like that. Okay, so this is the daily, and okay, this is the daily, and okay, so this falls, this rises. They sort of are a mirror version of each other, but I might be better off just expanding this. It will give us a better idea. Maybe not. Okay, if I made this into a show, remove. Let's try a different overlay. How about another Canadian pair? Maybe CAD yen, pound. Okay, let's try the dollar CAD, which has seen a lot of movement with the dollar to the upside. Okay, so display in separate area. That's probably better. Okay, we'll do it like this. That's it. That's much better. Right, I like this. I like this a lot, don't you? Yeah, it's much better. Okay, so let's bring this down. So we got them closer to each other. Now, I'm just going to make this a bit smaller and smaller again, so we can see the two. Okay, now this is good. Okay. Now, you can see what's happening here. Okay, so they are a mirror version of each other at this point. Okay, this is sort of March, April. Okay, and then again, sort of similar shapes here, but not necessarily inversely proportional. Now, this is the daily. So the past 3 days, the dollar CAD has risen quite a bit. Okay, from 1.08 to 1.0950. Okay, so that's 150. And what has the CAD yen done? Well, not a lot really. So if we looked at maybe the 4-hour chart, see what this might give us a better idea, and looked at the movement from, let's see, 30th of May, 1st of June, and I measured that with a ruler. Okay, 1st of June here to the high of today, 120 pips in 17 periods, 120 pips. So let's go from here now and measure it. What have we done? We moved 30 pips, right? And we've actually pretty much stayed at the same level. Okay, so we haven't really moved much. The low here, 6 pips difference from the two lows from the 1st of June. Okay, so in the last sort of well, trading week and a half, we've not really moved much at all. So, you know, they're not mirror versions of each other. So I wouldn't necessarily look at these two, the dollar CAD and the CAD yen, and sort of take lessons from looking across at correlations between these two currencies. There may be other currencies indeed. Perhaps it might be better to look at yen crosses. And so if we looked at this, try to obviously remove. Let's look at another yen cross, you know, and say, well, how about the dollar yen, pound yen, Kiwi yen? How about the Kiwi yen? It's an interesting pair. Separate area, that's it. Okay. So let's have a look at, again, from the 1st of June, and we have, what do we have in the Kiwi yen? Well, here's a story. We've got this here, and again, it's pretty much stayed the same. It's risen and it's fallen, it's stayed sort of similar level. So they're quite similar. Let's have a look a little bit further back. If we made it into a daily. Right, here we go. Here's the story. So CAD yen, Kiwi yen, CAD yen here, Kiwi yen here. Do we see similarities? Look at this rise. Bam. Look at this rise. Bam. Mirror versions, right? So the so-called commodity dollars, Canadian dollar, Kiwi dollar, similar. But, you know, wedged in here, this actually goes up. So the Kiwi yen, you know, has done a lot of work here to rise. Now it's hit the wall here at sort of 90, which is a massive kind of historic level going back decades, and it's falling off. You know, it's fallen off 400 pips, 350 pips. You know, in this kind of period from April to June, in 2 months. Okay, and this hasn't done much really after this sort of similarity. But recent performance, you know, look at these areas. If I just highlighted this area here, yeah, and this area here, yeah, you can see there's a fair difference. You know, kind of congestion, help, breakout maybe, and this is high and then coming down to low. Of course, the Kiwi yen also might come to a floor here, okay, around 86. So we need to see what happens there. But essentially, what I'm trying to say is the CAD yen is a very, very unique sort of pair, and I would certainly be attentive and try to figure out what happens next. I would just like to finish by thanking you all for listening to this video, and I haven't really got anything else for you at the moment to comment on this. So keep an eye out, because tomorrow is the ECB rate decision and the Bank of England rate decision. Friday is non-farm payrolls, so a lot of event risk, and that, you know, things move. Risk trends will have a bit of play on this, so you know it's not all going to be just quiet markets. There will be volatility around, so I would certainly keep an eye on these pairs. I would say though, if you look at this from you know, the beginning of, well, from 2009 to the present, do you not see? I certainly see some kind of let's put it like this, okay? Make it quite thick, black, thick. Let's make it thick, and also here. Okay, we'll make it thick as well. Black, 3 thick, and extend line, and that extend line. Okay, so what do you see now? Well, there is certainly a channel. I see a channel, parallel lines from here, 2009. To here, 2012, 3 years, and then from here, 2010, 2013, 3 years. Okay, so you know, bam, here to here, bounces, sort of below, but essentially, you know, back up, and bam again. So you could say that we're into a big sort of channel here, and so the next level down would be sort of here. So are we just going to continue down from here, which again would support the theory that we mentioned earlier, that the path of least resistance would be down. But then, you know, for the short, well, medium term, 300 pips up, you know, that's fairly good. This is a sort of fairly, would I say, super quiet pair. But let's have a look at the average true range again. Price overlay indicator, ATR. We have the ATR. Yes. So for the daily, okay, for the daily chart, that's a big range, the channel there. You know, it's at the moment it's 46 pips. So 300 pips divided by 50 even would be 6 days. You know, so if you went up, it would take 6 days to get there or to get here, and then another bit to get to the bottom. I mean, it's a fairly quiet pair. So 300 pips, it's a week's, and well, more than a week's worth, provided it went up, you know, sort of exponentially in a straight line. But so think about your options, the ATR. We are essentially halfway between the top and the bottom, the top and the floor of this channel. Okay, so It's not a perfect channel. I mean, you could argue that, well, we could move this to here, that would be a better channel, and that would be a sort of a newer channel, if you like, because it sort of generates here rather than down here. So, you know, it's a channel that started from here, 2010, 2011. So it's a kind of slow channel, but nonetheless a channel. So, you know, until a channel really should have two tests, and if it started here, that's the first test. So it could either not be a channel, and this could break through. One test, two tests, and we're waiting maybe for a third at the bottom. Okay, it may not be a channel at all. Maybe this is actually not really a top line of a channel, and all we have is maybe a trend line forming here. But either way, I would think this supports the theory that the Canadian yen is rising. If we went back to the monthly, just to go back to the beginning of our presentation here, we certainly have this level. Let me just make that into, actually no, remove it altogether. I'm going to create a straight line, horizontal, snap to nearest, okay, and make it into that. What level do we have? 74. 74.80. Why not 75? Let's make it 75. Right, 75. Now, see a lot of support here for 75. Certainly here as well. So this gives us ideas about this level being significant, and just going to make it quite thick, about this thick. Okay. Right, so we have this massive floor here, and then other sort of levels here. Okay, but this level as well is quite significant at this point, and at this point. So 2002 and in 2012. So 10 years between them, but still a level. Now look from 2002 at 75, and we've gone up to, if we measured sort of 2012, okay, to 2014, June to June, that's 2 years. How far, and back down, how far have we come? Well, take the ruler again and go from here to here. Okay, 1,860 pips. Let's say 1,850 pips, okay? And let's go from June 2002. Just have to undo this and take it back. Okay, June 2002 here. Oh, it's actually July. Okay, make it July. And go up to July 2004. 2 years. July 2004. Thank you. It's here. Okay. And it's, can't really see. Where are you? 700, something like that. 800. Well, I mean, that's not even half. Okay, so we are moving fast at the moment. So if you compare the two movements, this one upwards, you know, is faster at the moment. We certainly have moved quite a fair way from here. So what we need to see is whether we'll break through these levels, and then we're basically looking at the retracement of this drop down. So if we look at that, then this area is quite significant. You know, halfway through this candle is basically here, this blue line. So we're above it now. So we could say sort of was not even halfway. If you wanted to just sort of be sure, again, just redraw the fib that we did earlier in the video. 3 levels, and make them a bit thicker and sort of red. How about that? Red. Okay, here they are, the 3 levels. 1, 2, and 3. Okay. So, you know, this is the 50. So we are at 94 here. It's starting to get a bit sort of difficult to see things. So we're at 94. This is 96.95. So essentially 97. So 300 pips up. That coincides with one of our lines. Yeah, so if we went 300 pips up, we bump into the 50 level, which is a very strong level. So the path of least resistance might be going down, but then we've got the 90 level from 94 to 91, and then the 90 here, that's a strong level as well. So actually at the moment, it's a very significant moment for this pair. So a very interesting pair. So I really sort of advise that you just take it easy. This is kind of maybe a longer term investment, but there will be volatility rallies, so kind of look into it as well. So thank you very much for watching this. This is Francesco breaking off from the FreeFX video, and wishing you a very happy trading. Thank you very much, and take care.